Welcome back to another video. My name's Adam. Check out the move on Clover Health Investments today. It's down by 13% as of right now, apparently just for no reason. I couldn't necessarily seem to find an article about it or some revolutionary news. This is a highly shorted stock that we're going to be talking about and how to play Clover Health Investments stock. So welcome everyone. On this channel, we talk about stocks, cryptocurrencies, and my portfolio and how I'm able to generate pretty above average returns on my investments. And Clover Stock Health is looking better and better by the day. I recently invested into this and I was actually able to get down to about like an $8 cost basis, and I sold out at $17 when the stock went through the roof basically. So as we can see here, there was a massive short squeeze, or a lot of just investors buying, a lot of hype on this stock, and it shot up by over 100% in the span of 4 days here. So it was pretty ridiculous, and we can see how volatile the stock has been. This was a SPAC stock backed by Kamoth, and he's known as sort of the king of SPACs. And so generally SPACs tend to trade around $10. And there was a lot of hype in SPACs, and so this stock went from $10, shot up by 70% to around $17 before going all the way back down, more than 50% down, and at its lows it was below $7 per share. So as we can see right now, when it was below $7 per share to its peak again, where it traded at above $20 per share, its 52-week high was $28.85. That would have been a ridiculous over like 300% move in the share price here. Okay, so that would have been a really good gain if you were able to time that out perfectly. But of course, after all this hype, we can see that the stock went down and now is down by about 55%. So my thesis here is that you could earn a lot of money just based off of the volatility in Clover Health. Okay, and so what I decided to do is, during this ride down, I picked up a few shares, and now I'm picking up even more shares as this stock is going down more and more, because I expect something like this to happen again. All right, a lot of investors are impatient and they think that this stock has already been short squeezed and that it's just going to continue going down. It might, but I think the data tells us otherwise. So Clover Health Investments, this is by Short Interest Market Watch here, and it talks about the most heavily shorted stocks. We can see 36, close to 40% of the float is shorted on Clover Health Investments right now. And what you don't understand about, or what many don't understand about short interest and how to short a stock, is that you actually have to pay interest on the money that you're borrowing to short the stock. Okay, you can't just short the stock and hold it just like when you're going long a stock. You actually have to pay interest on the shares that you're shorted, and the more the stock goes up, the more interest you have to pay on that short position. So 36% of shares shorted that are on the float, that's a huge amount. All right, and I mean, another site confirms that this is Clover Health, around 36.71% of the shares on the float are shorted. So that's a very high short interest, and whenever I would say you go above 20%, there's a pretty good chance for, of course, what's known as a short squeeze. So my thesis is this, that still Clover Health is still an incredibly hyped stock. Right now, it's trading at around the SPAC price of $10. And this is a pretty good company overall, all right? And it has the backing, another thesis is that it has the backing of the Wall Street Bets army. And that is an army and a group that you do not necessarily want to mess with if you're short on a stock that has a heavy short interest and that is backed by Wall Street Bets. So I would say that now is maybe not, I mean, you could wait for it to go down even more, and now may not be necessarily the best time to invest. But if you don't take these risks, you may not get necessarily the gains. Okay, so that's why I'm buying into Clover Health stock. And I believe in this stock, not only in the short term as a potential short squeeze and to earn a lot of money. And we're talking about like when this thing squeezes, it goes up, as we saw, like 100% in the span of a couple of days. So not only that, but this is actually a company that has a purpose, okay? And I mean, I'm not saying that AMC and GME don't, but what I'm saying is that this is an actual company that has high growth and that has solid fundamentals behind it, okay? So for example, in the current year, in 2021, it's supposed to grow revenue 21%. And I know that this is only based off of two analysts, but the average estimate right here is 819 million from 206 million. Well, I guess that was per the quarter. But yeah, it's supposed to grow revenue 21%. In 2022, it's supposed to grow revenue by 34% to $1.1 billion. So this is a double-digit growth company. And I think what's scaring off many people is, if we just go to the summary here, is the amount of money that they're losing. So if you look at annually, I mean, we see the revenue growing incredibly nicely from 281 million all the way to 690 million from 2018 to 2020, but they're still losing money. They lost about 136 million in 2020, okay? And the quarterly, I mean, not necessarily getting any worse, and there's not really any trend in terms of the quarterly earnings. But again, I think that you have to take risks with high growing stocks like this. And another factor is that it's just backed by Chamath. And whatever is backed by Chamath is I mean, I know he's getting a lot of heat right now, but you could argue that he's a very, very good investor, and to get a stock near its SPAC price is a pretty good deal. So I would say that I'm in it for those reasons. And if you're just looking at the chart, just quickly looking at some technical analysis, here we can see, let's just go to the 3-month. I mean, this seems like not even a steep drop compared to what the short squeeze was. It's not even outside the lower Bollinger Band. So what we're looking at here is the 20-day moving average in orange and the lower and higher Bollinger Band. I like to invest in a company when it's riding the lower Bollinger Band. And we can see here that this candle is not even below the lower Bollinger Band because of such high volatility. The volatility makes the Bollinger Bands widen, and so it takes a lot more of a move for the candle to actually fall below or above the Bollinger Band. So this was a short squeeze right here. I mean, it only lasted like a couple of days, and now we can see the stock going back down by 11% here in this move, not even below the lower Bollinger Band. So you actually may want to wait 2-3 trading days for the candles to actually fall below or ride down the lower Bollinger Band, and then potentially pick up some shares if you're a more cautious investor. But I don't think that this right here, this move right here, when it went from like to above $25 per share, I don't think that this is the end for Clover Health investment, okay? I think that potentially this is even just the beginning, because a 37% short interest is incredibly high. So yeah, let me know what you think about this move on Clover Health Investments. The fundamental of this company basically is that it's a health insurance based company that's revolutionizing the way that we look at health insurance, making everything digitized, okay? So it's moving everything to a more online way where we do health and health insurance. So that's basically the fundamental between Clover Health Investment. It has a very strong growth opportunity, and it's already growing by a tremendous amount. So I would obviously recommend not only to look at the share price and look at the meme interest on Clover Health, but also look at the fundamentals of the company. And I like both. And if you combine both with such a high short interest, I think we're seeing something where we could potentially see another pop above $20 per share. So I would say that short-term price could range anywhere from, again, like $8 to above $20 easily, okay? And when you're riding this kind of volatility, I mean, a lot of people are scared and shy away from it. I would say take advantage of it. When you see this kind of volatility, I definitely think you need to take advantage of it. Accumulate a small position now, buy some more if it goes down, and just wait for the pop and ride up, and you'll earn a lot of money. I already did this once with Clover Health. I'm hoping to do it again. But again, I am not a financial advisor, just some guy talking on YouTube. So of course, make your own informed decisions. This is just what I'm doing. And this is all just for fun. So yeah, let me know what you think of this move if you're buying into Clover Health. Yeah, cheers. Please be sure to grace the like button as always and subscribe if you haven't already. And I'll see you in the next video. I love you all.